What's going on, guys? Benny Charles, founder of the Teach Me to Fish FX trading community, back with another video. This video, we're going to be going over our MNQ market outlook for the upcoming week. All right, to start off, we're going to take a look at the high impact news. All right, we can see here for the week of April 28th, 2024. We're going to have our first engineered injection of volume on Tuesday, April 30th at 8:30. Um, our first, so yeah, that's when we'll first get that injection of engineered volume. However, I would say the first significant news release is going to be our FOMC statement at 2 p.m. on Wednesday, May 1st. And then, of course, the first Friday of the month, Friday, May 3rd, 2024, we're going to get our non-farm uh, payroll. Okay. All right. So let's take a look at the chart starting here on the weekly. Already have everything lined out, but let me explain to you guys what I have here on the screen. And let me just minimize it just a little bit so you guys can see everything. All right. So we can see that the week before last, all right, we had a nice expansion candle to the downside. It tapped into this weekly fair value gap as well as taking out this external liquidity. The external liquidity was the uh, last thing that was formed. So I'm going to say that we took out external liquidity and now we're looking to pull back into internal liquidity. And this is what I stated last week. But before last week's candle formed this bullish candle, which in turn created this our weekly fair value gap. I told you guys that we will be going from external to internal. Okay. Our internal at the time was this weekly breaker. Okay. Which is now a unicorn after the closing of last week's candle. So we went external to this internal breaker. All right. However, we now have this fair value gap as well as this weekly volume imbalance, as well as this weekly order block. Okay. Um, we have our weekly price range equilibrium right here at $17,911.25. All right. We have yet to pull back into that. Okay. We came close. I'm going to enlarge this a little bit. We came close, but we have yet to tap it. So I think that the market is going to continue up, right? I think the market is going to continue up. So, with non-farm payroll being on Friday, um, if we have not hit equilibrium yet, I think that that is going to be negative results, which is going to cause the Nasdaq to go up. Okay, that's again if we have not, right? Um, as well as if we take a look here on the daily. Okay, I'm gonna drop down to the daily really quick. Okay, here on the daily, right, we went internal, right, to this daily fair value gap. I'll slide that over so you guys can see that. We went internal to the daily fair value gap as well as this daily breaker. Okay, and so at that point, you would be looking for what? External to be taken. All right, our first external liquidity is up here at $18,519.25. All right, so this is what we're gonna do for you guys, just so it's not too much on the chart. We're gonna hop back up to the weekly or throw the weekly in here. So this is the weekly um, PD arrays, right? On top of this daily external range liquidity, right? So the daily went internal. Uh, here, we'll use that. All right. So the daily again went internal. All right. So we're looking for external. All right. So I think that we could possibly see the MNQ rise up to $18,519.25. Now, that does not necessarily mean that that is going to happen next week, right? We could get a brief expansion to the upside, and then we could get the market could start going moving sideways, and then the following week tap into this before heading down lower, or of course, it could shoot for this. With all of this high impact news, it's very possible that MNQ could shoot for this to go ahead and start lower. Okay. If you guys recall, I told you guys that overall, I am expecting MNQ to trade down to its uh, bullish equilibrium of $16,422.50. All right. So it has to gain fuel, right, from the upside to reach its downside objective, right? Now, it does not have to, right? None of this, the algorithm does not have to follow its rules, right? Because of the manual intervention, right? It does not have to follow its rules. Okay. Um, However, if it does, these are the things that I am expecting, right? So I am overall expecting MNQ to get down to $16,422.50 this year. All right. Take out uh some of this external liquidity as well as tap into a unmitigated fair value gap or breaker. Now, it does not have to be unmitigated. It could be a mitigated point. So it could reach down to its equilibrium of $16,422.50, and it could tap into this liquidated, excuse me, I said unmitigated, but I like to say liquidated. It could tap down into this liquidated fair value gap. Let's go ahead and mark that. This will be a bullish weekly fair value gap. Okay. And then move to the upside. Um, so let's drop back down to the daily. All right. No, let's hop on the weekly. Let's explain the weekly. I mainly like to go based off of the weekly, just coming from supply and demand and using COT reports, weekly COT reports. That just kind of sits well with me. But what I wanted to also point out here on the weekly is, oops, all right, we have volume imbalance. So we have fair value gaps, right? We have bearish volume imbalance, bearish fair value gaps. We've already tapped into this bearish weekly order block. Okay. Um, so we have enough reason for the market to be drawn to the upside, right? Taking care of some of these bullish PD arrays or actually bearish PD arrays up into the premium, okay, or the equilibrium, right? So um, I have reason to believe that the market is going to continue higher, right? I would like to see it tap into this daily external range liquidity, um, and then begin to head lower. Again, if that happens this upcoming week, great. If not, it's cool because we basically we drop down to the lower time frames anyway, or I do to take my trades. Okay, and I learned my lesson. I want to say that I learned my lesson. Hard habits are hard to break. But I think last Sunday I posted a video about um, possible bearish um, 15-minute breaker blocks, right? That I would be taking trades off of, and I took the trades, and they did not work out. Um, and I did that on a Sunday night, like so stupid, like beginning of the week, like just come on, really, I don't know what I was thinking. So, but it's all good, right? Uh, excuse me. So I am looking for the market to trade higher this week. However, I will trade what the market gives me, and I will be sure not to start trading until London kills on Monday. All right. That's just a habit that I have. I'm always looking at the charts, checking on the charts, and um, just feeling like I have a good feel for the ICT concepts. Mm. And yeah, excuse me. Um, I need to be aware of time and price. Time is the very, very, excuse me, I have to take a drink. Time is the most important thing when it comes to trading. All right, I've heard ICT said, I've seen the charts prove it to me time and time again. I got to start being hard headed and listen, right? Listen to the charts, listen to time, listen to price. Um, so, um, yeah, again, I would like for the market to expand higher, right? Um, so we could, it'll make me feel better to have my overall um, thought or direction for the market to work out. Um, let's take a quick look at the quarter, okay? Um, let's see. Let's go to the daily. So the first Monday, and I think I actually already have this marked out. Uh, yeah. All right. So the first Monday of April 1st, and I got this from Trader Day. The first Monday, right, of April is the Q2, right? Um, or the true open for the year. Okay. So we opened at 18,500 even, right? And we've just been seeing the market head lower. I think that our turning point again is going to be 16,422 and 50 cents, right? This is an election year. If you guys ever go back and study the election years, usually when you have a president going out and a president coming in, you will notice that on the president's term that is going out, the market will begin to drop, right? And then once the new president gets in, you kind of see it go up. So I am, and of course we are all wanting. I don't know if you guys do long-term investing like I do, right? So for my Roth, I am looking for a discount, right, to really start um, beefing up my dollar cost averaging. Right. So I want to see this market pull back at least to 50%. Right. I want to see it pull back to at least $16,422.50. So I can beef up, right, my investments. Right. So my investments too. to can gain uh, interest, right? Positive interest. So this is playing out, as if that will be the case. We're just in April, almost May, so um, I'm expecting again. Um, we're probably going to see some consolidation, some sideways movement, and then a drastic drop, and then a drastic rise. That's what I'm thinking. That's what I'm looking for. So, but you guys did not click on this video for all that. I feel like I'm kind of rambling on now, but maybe that could be insightful for someone. All right. So again, I am expecting the market to trade up this week. I would love for it to trade up into this daily external range liquidity of $18,519.25 and then begin to head lower. That would be great if that happens this week. If not, and it's okay because we will be on our lower time frames taking our trades. Let's take a look at the 4 hour really, really quickly. And weekly. Let's see what we have. Um, so we have already reached the equilibrium for our 4 hour, um, um, excuse me, dealing range. Yes, dealing range. Sorry. Um, however, I am expecting for us to go higher. Um, so our 4 hour dealing range would start here. Let's see where this is probably gonna land like in like the 80%. Let's see. That's 18,708.50, 18,707. So it's here to here. Yeah, so um, we're gonna, as far as the 4 hour goes, we're gonna get a pretty high retracement, or I'm looking for us to get a pretty high retracement up into here. Um, so we will be looking to take this higher. Just do this. All right. So let's look at our bullish PDRAs that we could see. Okay. So we've already had this 4 hour unicorn liquidated. All right. It's already been liquidated. Okay. Respected really nicely. Okay. Um, I mean, I really wouldn't call this a unicorn, but we do have. I mean, you can because you got the high, you got the low, and then the high was taken out. So let's go ahead and draw that out. So it would be the last up close candle, which would be this one, right? And that one would also be a unicorn here on the 4 hour. That was respected. Okay. Uh, need to change this real quick to the right, and let's save unicorn breaker. All right. So these are all 4 hours. Where is this one? What is that? Give me 1 second, guys. Okay. It's that weekly. So Still saying the weekly. I need to I need to connect my mouse. Let's go ahead and get that pushed over so we'll be able to see it. And look at a 4 hour in here. It's not bad. Not bad. We're gonna keep it on because it's been respected. Okay, it's already pushed up. Technically, got a high, low, then another break. I love these, I love the unicorn guns. So it's gonna be the last up close candle. Okay, okay, we'll just take that. And these unicorns are just stacking, right? They're just stacking. Mhm. We did we have an inversion there? Let me see. The close of this candle is, here, let's just do it like this. Stop making it hard. All right, so yeah, we did have an inversion fair value gap right here. All right, let's grab that. Grab that. So, and need to get rid of that outside line. Just looks better to me now. Eight. Six. I already put. I think I already put 4 hour, didn't I? Yeah. Sorry, guys. I mean to be doing this during the video, but I'm sure it's gonna be helpful for somebody. Okay, let's go on about that. That's a weekly. Okay. Um. So yeah, we have that. So I'm just showing you guys that the market is just it's just really bullish right now. So I'm gonna get rid of that because we now have a fair value gap right here that we're probably gonna see the market come in and test. All right. We also have a volume imbalance right there. All right, so we could see the market try to trick us out and give us pause. I just thought about what I just said, trick us out. But anyway, yeah, the market does trick out big time, but uh, we could see the market open up and trick us out and invert this bullish fair value gap, and possibly head down and find support into this 4 hour volume imbalance. Same thing on that one. Okay. All right. What else? And it could come back down to this order block, but don't I don't think so because it already tested it and already liquidated it. So I don't think so. So yeah. Um, so overall, I'm thinking we're probably gonna come down and find some port in this 4 hour bullish volume imbalance, and then send us up. Um, but again, at the very least, wait until the London kills on Monday, which is from 2 a.m. to 5 a.m. Eastern Standard Time before you start looking for buys. That's what I'm going to be doing, and this is not trading advice. This is just me sharing with you guys what it is that I see and what I think, right? Um, and possibly, taking the trade up to here. Let's say if it does come into this volume imbalance, let me see something, guys. Let's take a look at this in a 15 minute. It's already been liquidated. Also got a 15-minute volume imbalance right here. Sheesh. I mean, if you did set and forget, you talking, this would have to be, so you got February, you got right there. So, I mean, overall, it's probably going to be a great risk to reward. But, I mean, I probably wouldn't be setting up set and forget. So, man, you're talking about a 6 hour trade, risking 118 points for 732. That's dope. Right? That's dope. Let me see something here. Throw a little DTFX in here. Let's throw a little DTFX in here and say, yeah. So yeah, let's say if you decided to do it this way, all right. Oops. Let's say if you took that trade at the equilibrium of this swing zone. This is what I call it. I don't know what he calls it, but maybe you can try that. That would be a little bit more safer, right? Or, all right, you can try that, and that would be 10R, right? Risking 75 points or 780 points off of that. Or let's say if you possibly waited for this fair value gap, right? How big of a fair value gap is that, though? Let's make sure. Yeah, it's a fair value. It's a very small one. But the market could come back, tap into that, tap into this order block for the 15 minute. So it's very possible that the market could, um, very possible for us to want to wait and wait for the market to trade down into this area. All right. Trade down into this area. Now you're talking 13R. right? Risking 57 points to gain 798 points. I am going to be looking for this. I want the market. This is what I want from the market. This is what I want from the market. What was the pullback on this price range? Yeah, we had got a 50% pullback. Let me extend the lines to the right. Yeah, we got a little more than a 50% pullback before it pushed up. So that I believe that this is done, right? Doesn't have to be, but I believe this is done, and this is the focal, right? This would be the focal. This would actually be a dealing range on the 15 minute. This wouldn't be a price range. Again, guys, the dealing range is from the first liquidity sweep to the last point, preferably the last liquidity sweep. All right, so this would be our first liquidity sweep, right? So we had liquidity here at $17,693.50. All right, it swept that, pushed up, and we actually got another liquidity sweep. But for me, it's typically liquidity sweep to like the next or the most recent swing, right? Swing point. So um, we have not gotten a pullback to the 50% of this 15-minute dealing range. And let's see, the 50% of the swing zone is sitting inside of the golden zone, right? It's sitting just above the 70.5% retracement. Okay. And this fair value gap is sitting towards the end of the golden zone. All right. So, yeah, I would love to see this. This is what I'm going to be looking for. And I want this to take place sometime on Monday during London kill zone. So, those are the reasons why this is the first trade that I'm looking for. So, let me go ahead and delete. Just gonna delete this stuff off of here. All right. Lock this in. Throw this onto the 4 hour. And guys, this is the first trade that I'm looking for of the new week. Let's do it like this so you guys can see. We're talking a 13R trade, possible 13R trade. This is what I'm looking for. This is what I am going to be shooting for. And let me adjust that to reflect that. So 13R, almost 14R trade. Man, that is going to be great. That is going to be great. All right, guys, I have rambled on enough. I hope that this has been insightful for you guys. Please comment below. Tell me your thoughts. Like, tell me if you think that is BS. If you think my outlook is BS, or if you guys agree, or whatever. Comment below. Let's have a healthy conversation. And as always, I hope you all stay well and safe trading to you. Have a good one.